All right. Hello, everyone. We are here and we are live. I apologize I apologize to those of you who were expecting me to go live at 7 o'clock on the dot. Things come up, and we YouTube content creators, we are people ourselves, and sometimes things come up, but uh, I'm here. My guest was able to adjust as well. So he will be here shortly. Let me make sure that this is live. We are live. I see the red logo there. I want to thank everyone who liked the stream before the stream started. That's always hopeful to get those likes before the stream started. Um, yeah, everyone, I'm gonna play the intro. I meant to update it this weekend, but this month was flying by. Can you believe January is almost over? January 2023 is almost over. It's like the earth is spinning around a lot faster than it was before. So I'm going to play the intro and then I'm going to hop in. I see my two other financial guys are here. Well, Jay Bones was the first one in. Thank you for being here, Jay Bones. We have the All-Star Advisor. Sheed is here. Rael, much respect to Rael. Rael turned me on to the great Reginald Lewis. Why should white guys have all the fun? Black History Month is in what? It's in a week. So we're going to pay homage to Reginald Lewis in February, just like we do all year. Okay, I'm going to get this thing started. Guys, the super chat is live. If you want to donate something via Cash App and PayPal, that information is here. Me and Salchi, we're going to talk about Cash App and PayPal because there are new tax treatments for Cash App, at least I think Cash App and Zelle and the other ones. So I'll see you on the other side of the intro. I think Salchi will be here soon, so I'll see you soon. Please hit that like button if you haven't. Please subscribe if you have not. Hey everyone, welcome back to Big Discussions 76. Tonight is going to be another money topic. The last two have featured the all-star advisor, Alonzo Hall, and Sheed We Here. We talked about life insurance and home ownership, particularly for first-time home buyers. If I only have a few questions for Salchi, he knows that. So if he feels like entertaining some guests, I see some more of the money guys are out there. It looks like we're forming our own little group here. But if Salchi feels like entertaining some guests afterwards, maybe we'll bring some people up. I have to go into the office tomorrow, so I'm not trying to stay on super late tonight. I don't think he is either, but let's see what happens. So everyone, I'm going to start this stream the way that I did a Saturday stream with Alonzo and Sheed, and I'm gonna bounce off my book project because, well, I'm trying to publish it. My plan is to publish it soon, but a couple of years ago, you guys know that I'm a blogger and I'm a writer. But a couple of years ago, a friend of mine from the academy, we were talking, and she looked at some of the writings from my first blog, and those writings were financial writings. An example is this one. I don't have it loaded up, but here it is. An example was this one. It's called, I called it, Are You Getting Your Matching Contribution? So this one was about retirement. If you go to my first blog now, there are thousands upon thousands of blog posts from customers now, short ones, informational ones. Um, but in the beginning, I was writing all of these myself, and mine were more stories and more thought and personal stories. And some of those were about money. And so my friend from the academy, I think she went to my blog one time and she told me afterwards, she said, I'm trying to figure out who his audience is. I'm trying to figure out who your audience is. So who would be interested in what a matching contribution is? Who would be interested in life insurance? Who would be interested in first time home ownership? Who would be interested in learning about what the updated tax provisions are? Well, people who are interested in money, and people who find money interesting, and people who have realized that they don't know and that there's more information that they need to absorb and use, and that there are more tools that they need to put on their financial toolbox. Red Scorpio says, Unc, you look cool tonight. You know what, Unc? This has become my standard look, the mailboy cap and the scarf in the winter time. So I appreciate that. Alonzo, this must be one of your folks. Well, welcome, Red Scorpio. So everyone, my book, it's a basketball related book. It's about my little high school basketball journey. But what the book is about is it's a lot, it's a lot about what I discuss here. And that's that what you know and what you don't know can and will affect your life. And the earlier you learn things, the better off you are. So this particular arena for my book project just happens to be the great game of basketball. And so the analogy that I gave on Saturday before I brought Alonzo and Sheet up was, a kid who learns how to put the ball through his legs and throw no look passes and um, dunk the ball at an early age, to play above the rim, to play with older competition. A kid who learns those things at 6 years old, well, maybe six is too young, but a kid who learns how to play those things at 10 and 11 years old has an advantage over a kid who learns how to do these things at 17 years old. He's just further along in the game, and he's going to get scouted earlier, and he's probably going to go to a bigger college and those kinds of things. Money is the same way. So when we talked about life insurance, Sheed shared that I think it was his great grandmother. Sheed, if you're out there, you can correct me in the chat, but he shared that his great grandmother was gaming them up on life insurance at an early age. So Sheed was probably in high school thinking about life insurance and its benefits. And so he was already thinking about that. I didn't start thinking about life insurance or matching contributions or taxes until I was out in the working world in my late 20s, in my 30s, and in my 40s. Some kids got this stuff in their teens. And actually, in terms of retirement and matching contributions, I have a mentor who really had to put his foot up my rear to get me to save in my retirement and to get my matching contribution. So that story, that's a true story. And one of the things he told me is you should have been told this when you were 18 years old. Okay. Well, based upon the family that I came from, we didn't talk about that. So, and if I hadn't met this mentor, I probably wouldn't have started saving in my retirement account in an effective way for years to come, if at all. So it matters when you learn things and it matters who is in your circle. So my guest is backstage, so I'm going to try to make this short. We've recently talked about life insurance. We've recently talked about first time home ownership. So taxes, why taxes? Well, it turns out, and I found out about this the first time reading this book, the Rich Dad Poor Dad, and the other books in the series. It turns out that taxes are a major component of many people's wealth building strategies. So, people who are wealthy, they're not all evil, despite what you hear in the mainstream news, and despite what your families may say around the Thanksgiving dinner table or at the barbecue. All wealthy people are not evil. They spend time thinking about their money. They hire professionals to help them manage their money, accountants, tax professionals, all kinds of advisors. So that's why taxes are important. And managing tax in our current system is wise and prudent to do. Now, I'm going to be honest. I don't understand how all of this works. I don't understand how the country can be trillions of dollars in debt, but yet can still hand out refunds every year. I'm happy to get my refund or whatever I get, but I don't understand how all of this is going on and we can give money away to other countries and we can fund this and fund that. And then the government still has money to give away to people. Okay. Before I bring Salchi up, I think that's all I wanted to say in my monologue. I recorded something. I recorded a passage from the book Cooperation and Coercion. You guys know that I've had Dr. Anthony Davies and James Harrigan uh, on my channel before. One is an economist, the other one is a political scientist. They wrote the book Cooperation and Coercion, and they wrote a chapter on taxes from the federal perspective. And Dr. Davies really, really eloquently laid out the difference between increasing tax rates and increasing taxes. So, as you'll hear, even though the government increases the tax rates, that doesn't always bring in the taxes and the revenues that they want. So, when you hear about the mainstream media talking and the political class talking, they're usually talking about increasing the tax rates, but they don't always get what they want from the increase in those tax rates. This is about a minute and a half, and then I'll bring Salchi up, and he's going to tell us about what's new and what we can expect for our 2022 taxes. Here we go. And you guys will recognize the voice. Notice that the government cannot actually raise taxes. What the government actually does is to raise tax rates. Taxes arise only after buyers and sellers in the economy react to the tax rates. As the 1991 luxury tax illustrates, an increase in tax rates does not necessarily result in an increase in tax revenue. Think of the economy as a pie. The government chooses the relative size of its slice of the pie when it sets the tax rate. For example, the government may decide to take a 10% slice of the pie, but the absolute size of its slice, the tax revenue, depends on how large the pie is. A 10% slice of a 6-inch pie will be smaller than a 10% slice of a 12-inch pie. If the government raises tax rates, but in response the economy shrinks, then the government ends up taking a larger slice of a smaller pie. Whether the government ends up with more pie depends on whether the pie shrank by less than the government's slice grew. Okay, so there was a lot there, but I want everyone to take something new away from my content. So there's a difference between increasing tax rates, and there's a difference between, but that doesn't correlate to increased revenues. That's what I want you to see. And I think what me and Salchi are going to talk about tonight is going to give some indication as to why. Because when they increase those rates, many individuals course correct and figure out ways. They may figure out ways to not pay those increased rates. So everyone, I'm going to bring up Salchi the Equalizer. That's a name that Uncle Ron Wills affectionately gave him. I'm going to give this disclaimer. I am not a fiduciary, so I am not rendering financial advice. I was going to say legal advice. I'm not a fiduciary. I'm not rendering financial advice in this stream. We're having a discussion, and Salchi is very knowledgeable on this field, so I like to have him come up. So everyone, let's welcome Salchi the Equalizer. Salchi, what's going on? Happy New Year.
Good evening. Happy New Year to you as well. Can you hear me?
Yeah, I can hear you.
Perfect.
How you doing?
Everything's good. Everything's good.
All right.
Yes,
Okay.
sir. That's good.
Well, Salchi, I have 2 questions for you.
Okay.
And then we could pretty much go wherever we'll go for about an hour. We're at like 20 minutes now. So late last year, I go into the office 2 days out of the pay period, and one of the custodians, she's friendly, we're friendly,
Okay.
and she came to me, and she had just a scared look on her face. She said, "Have you heard anything about? I've heard that we're going to get smaller tax refunds this year, and I'm just so scared. Have you heard anything about that? I heard we're going to get smaller tax refunds, and so much information is flying by my face on this computer,
Yeah.
on this cell phone every day, and I think I did hear something about that. So I told her, I said, yeah, I did hear something about that, but I don't know for sure.
Yeah.
So 2 things from that. So first of all, a lot of people depend on those refunds every
Yeah.
year.
Yeah.
But if that's true, and I do remember seeing that right now, our government and the IRS, they're trying to close all the holes in the boat. And I think they're trying to capture all the money that they can, because there's money floating around in the gig economy. I just received a 1099 for Cash App. So
Okay.
I made just over the $600 for 2022, which is not a lot of money, but that's where they set the threshold.
Yeah.
So they're trying to collect, I think, where they did not collect before. And some people are really depend on those refunds. So let's hit that first. Should people expect smaller refunds for their 2022 taxes? or does it depend?
It depends. First it depends, and then generally speaking, I would say yes, only because the last 2 years was basically an anomaly. Um, so it's kind of like business as usual. So to most people, it's gonna feel like, with the exception of inflation, it's gonna feel like they're being squeezed via taxes, but they're just getting rid of all the free money. That's really all they're doing. They're not issuing all that money that they were giving out, especially in 2021. I mean, that's all they're really doing. That's it.
Okay, so you're referring to the stimulus money.
Correct. Because that's, I mean, and that's why we have so much inflation. Um, I mean, okay, so we can get right into, what the friend was asking about at work. And that was basically about, typically that was the child credit or dependent credit, right? Or what they considered American Rescue Plan Act 2021. This is 2021, so it wasn't extended. That's about it. So the dollar limit on qualifying expenses is $3,000 for one qualified person and $6,000 for two or more qualified persons. Um, that's that's what it was, and it's going back to now. I mean, just going back to for one person. Well, actually, no. That's where it's at right now. What we received, especially in 2021, was the extra $1,400. Obviously, if your income was, or your AGI was less than 75,000, which is going to be majority of the income earners as individuals. Just double that for those who are married, 150,000, and then joint. So obviously for joint returns, that was $2,800. So I mean, it's just 1,400 times two. Okay. And then it was 1,400 per dependent. Typically, most people in this country, I mean, I know we're on decline rates, but you're looking at 2 to 3 kids. So when you add all that up, yeah, I mean, people were getting, like some, like $5,000, $5,600 extra, depending on the income. So, and then they weren't traveling as much. So they weren't spending as much on the expenses for travel or upkeep. So, yeah, in a sense, it appeared that they received it. Well, I mean, they did receive a lot of money, but that's just going away. So that's what I'm saying. Everything's going back to normal, but they think that their taxes are like increasing for the most part. Maybe state-wise, because believe it or not, the state is actually far more aggressive than the federal government when it comes to taxes, and the state actually has more taxes than the federal government. A lot of people don't know that. So that's all that really occurred with that. Also, health coverage tax credit is not available anymore. So that was up to 72.5% of your healthcare premiums. That's taken out. Child tax credit 2021 was 3,000. 3,600 for children under 6 years old. Now, again, that's going back $2,000 for a qualified child. And for the additional child tax credit, that actually increased to $1,500 per child. And obviously, a qualified child, they have to be under 17 as of December 30th of the previous year, or 2022. So, I mean, that's how they look at it. And when it comes to taxes, dates are highly, highly important. Dates, age, where you live, how you make your income. It's and the basis on when you started on certain things or certain investments. I mean, to me, that's where everything starts. Now, when you start moving things around, then I mean, everything can change. That's why taxes are very complicated for the most part, because a lot of people don't understand it, and they're always changing things for various reasons, for whatever purpose the government wants to achieve via, international, well, for the country itself, or whatever the state is trying to do. So almost no one knows everything when it comes to taxes. Nobody. You pretty much have to specialize. I can tell you right now, the typical person who does taxes, their own taxes, by the government standard, they spend roughly, it's ridiculous. I think it was like 7 to 11 hours doing their own taxes. It's freaking ridiculous. Well, I mean, because they don't know what they're doing or where to look. A typical person, if I do the taxes and they give me what I need, I could do the taxes in like 20 minutes. So, you know what I mean? Like, I mean, that's the difference. Now, the next thing would be the 1099K, which I'm sure is yes.
Before we go there,
Yeah.
so in summary,
Yeah.
and you can correct me if I'm wrong. Due to the pandemic, the government gave they increased all these credits.
Yeah.
So they put more money out, and now they're kind of taking it back. It seems, yes.
They're just eliminating it.
They're eliminating it.
That's it. All they're doing is eliminating it because there's still a lot of inflation there's still the inflation rates are still very high, and there's still a lot of money into the system. Things haven't normalized yet. So I wouldn't say necessarily that they're collecting the money, because in a sense they're going to get it back for the most part because of the interest rates, because all the businesses and companies had to adjust their prices. So because they adjusted their prices, their revenues, in a sense, it will go up. And nominally, we finally saw wage increases. So depending on what bracket you're in, you're going to be paying a little bit more taxes. So you see what I'm saying? That's how they're going to get the money back in that sense, via taxes, that way. So it's just so many different small ways that they can retrieve it again. But the thing is, they put all this funny money into the system that wasn't earned, like without production. So if I'm just looking at it like that, it's kind of like they are getting more money because there wasn't any production whatsoever. I mean, it sounds harsh, but I mean that's just reality.
Well, that's too much money chasing too few goods and services, right?
Correct. I mean, it's we've just never seen it on this level. So I just call it the big experiment. that's just what I've been calling it for the past like 2 years. And obviously those who are, in my opinion, and I always harp on the top 10% and everybody else, you're going to get hit the most if you're not in the top 10. I mean, especially with this inflation, especially if you're not in the top 5%. And then again, if your earned income, which is wages, salaries, tips, taxable employee compensation, and net earnings for self-employment, you're pretty much gonna get hit. People really don't understand the difference between us, the rich and the wealthy. The rich and the wealthy, earned income is not high for the most part. The majority of their income is capital gains and dividends, which is the hardest way to make money. Like a lot of people really don't like whatever you make, just whatever it is, gross or net pay. Just do the calculation on how much money you need to have in capital just to receive that same amount annually in dividends. You need a lot of money. And this is what people do not understand. Like at all. Like, let's say you make, let's just say 50,000. You're going to need, and then it depends on the interest rate. You're going to need hundreds of thousands of dollars, like minimum hundreds. I'm not talking 1, 2, 3, 4. You're going to need more than that in capital, and the interest rates you should be receiving, even at that, because it's a small amount. Believe it or not, even at 500,000, it's going to need to be more than 8%. Like, I try to keep it simple, and I try not to get too detailed, because if I do, a lot of people just get depressed because then because they realize they're not where they really think they are. It takes a lot of money. Same thing when it comes to I hear compound interest, and I always ask people, okay, well, what amount does compound interest really take off when it really gets interesting? No one can ever answer it, because there's two very important things about compound interest: time and the amount you're starting at. We don't get time back, and we don't have infinite amount of time. Okay, so if I want to, a reasonable amount of money from compound interest, believe it or not, it starts at about $2.5 million. Most people don't have that. A lot of people aren't even going to make that in their lifetime. And when it really starts to get silly, is that like 5.34, I think, million? Like, people don't want to sit down and do the math.
Okay, so what you're saying, and I want to get to the
Yeah.
the 1099, is that you need that amount, at least that amount, for the compound interest to start working for you.
Like now, or else you need a lot of time. Remember, and like I said, we don't have infinite time. So what are you going to wait? 40 plus years? And again, like I said, most people don't even make, especially not 5.2 million. Most people who make 5.2 million in their lifetime, I'm talking total income, is typically someone who's like a graduate, who has an advanced degree, typically. That's in their lifetime. So we're talking 40 plus years. And those people are obviously in the top 10% of income earners. That's reality. And I'm not even accounting for inflation. So like I said, I try not to get too deep into it because people will get depressed.
Okay, I'm just making a connection here. Now I think I understand why my mentor told me that once I got a certain amount in my retirement account, and if it was invested properly, it would start
That's right.
going on its own.
There
But that
you go.
minimum amount needed to be in there.
Correct. You need a certain sum of money in there, and then it also depends on the interest rate, the interest that is occurring. So, with investments, it depends on what's available based on who your employer is, because if you, well, there's two things going on too. If it's just there's two things. If it's just like a traditional 401k or pension, that money's going to be put in before tax. So that means they're going to get the tax later on. So the problem is later on, one, I don't know what the tax rates are going to be. Two, I'm going to be older. Three, inflation has been occurring throughout that whole time. A lot of variables I have no idea. Or I can get, like a Roth, 401k, and that's net, that's put in there. So now whatever occurs in there, that's my money. It's not going to get taxed again. That's what I do. I do not have a traditional 401k. Why would I do that? I know what's going on today, so I don't have to worry about taxes later on. I mean, I'm going to report it, but I won't be taxed after on whatever my gains are. So I can trade with that money.
Yeah. I was also encouraged. The federal government started offering the Roth option, so I was encouraged to change the mix. I don't want to tell all my business, but but change the mix so that was a little bit more Roth.
Yes.
So for those watching who don't know, the Roth is after tax. So in theory, they shouldn't be able to tax it again.
Yes, it's funded with after-tax dollars, and your gains are not taxed.
Okay.
Yeah.
Everyone, if you're just coming in, please hit that like button. If you have questions for Salchi, please ask them in the chat. Let us know. The super chat is live. If you want to donate something via Cash App and PayPal, that information is here. So Salchi, let's switch gears a little bit. Let's talk about the alternative sources for making money. Cash App, Venmo, Zelle. What's happening with those?
Believe it or not, this is actually going to be a quick answer. It's been postponed to 2023.
What?
It's been postponed, so you don't have to worry about it.
Wait a minute, but Cash App just dispersed the 1099s.
Oh yeah, but what it is, they still have to disperse it because they don't know what else is going on in your life. They have no idea. They just have to do it via the laws. But it's still the same law where the current law is gross payments, gross payments including like 20,000 K and more, and 200 plus transactions must be reported. Is that where you're at? Is that your situation?
I don't. So say it again. So 20K,
20,000 gross payments of 20,000 or more, and there are more than 200 transactions reported.
not me.
I'm quoting exactly. I'm quoting that's it. That's the policy. That's it. So right now for this year, yes, so far, I mean, unless they decide to postpone it again, because they can do that, then it will be okay, 600 or more. Fine. But they can change it. And that's to their discretion. And the other thing people need to understand, because it seems like the IRS, people think the IRS like writes these laws. They don't. It's Congress. The IRS is all the IRS does is interprets the policies written by Congress, and they enforce it. That's all the IRS does. So, AKA the IRS is the government's bookkeeper, or basically accountant. With force. That's it. That's all they are.
I was gonna say, Salchi, they carry a pretty big stick over there.
They carry a big stick, but but they don't like write policy at all. But that's how people perceive them. They don't write it. It's Congress.
Okay.
Yeah.
All right. So all of that is
that's it.
The gig workers can relax for a little while longer.
That's it. But see, the problem is with most people, not even just gig workers. The problem is people don't have their paperwork in order. That is their problem, and this is where people get into trouble. Poor bookkeeping or no bookkeeping. You try to be a jack of all trades. Good luck. At minimum, I have to do 18 hours credit, just bare minimum, to do taxes. But that's like nothing, really. It's still a lot. But I pretty much listen to two people. One of them is a mentor, and he's in his 40s. He works on Capitol Hill. His department reports directly to Congress. He's a CPA. He used to close. He's worked for the FDIC. He used to close banks. So I listen to him because we do taxes together during the season. He does it for fun. The other guy I listen to, he's been doing taxes since the early 90s, and he's a multimillionaire. He does taxes. That's his business. So that's why I can accelerate my learning very fast. And just those two guys combined, just, their continued ed, at a minimum is in the 20s. 20 some odd minimum a year. Minimum. So, it's a lot. It's a lot when you have other things going on in your life. It's a whole lot.
Okay. So when you say that the problem with making money on those non-traditional platforms, Cash App, Zelle, Venmo, you say the bookkeeping. What do you mean? Do you mean people, because there are people using those to stay alive, and then there are people using those for their business? What are you referring to?
Well, I'm just talking about the books. In business, basically, if anybody says the books, they're talking about your finances, your financial statements. They're talking about all your transactions. And what people, best case scenario, and of course, it also depends on the quality of the people that you're hiring, you would want a bookkeeper. So you're looking at a bookkeeper. I want to stretch it. They're doing your books once a month. Really, they should be doing it once a week or once every 2 weeks. Really. Then you have your accountant. Bare minimum, your accountant. And there's a difference between your accountant and your CPA. The main difference between the accountant and CPA is that the CPA, the stuff they have to do just to become a CPA, just to prepare for the test. I looked at the stuff. It's freaking, it's outrageous, but they can do audits. That's the only difference. They can do audits, and they can create certified financial statements. That's it. So you want your accountant or CPA doing that at least once a quarter. And I also say the tax professional, because people think automatically that an accountant or a CPA, they know taxes. No, only 3 to 4% of accountants actually do taxes. That's it. And within the accounting and tax professional arenas, the numbers have been declining because of all the tax changes, and they're typically older folks, and they're tired of the government changing stuff and do all kinds of nonsense. So a lot of them have been retiring or just leaving the profession. So that's the other problem that's been going on there. So
okay, well, let me share something here. So something else I thought about when Salchi was talking, my mentor shared to me, there's a difference between a tax preparer and a tax advisor.
Oh yeah.
So for years before I started my LLC, and I was going to a tax preparer. I was going to Liberty.
Yeah.
Yeah, I was going. They would send me the postcard, and I call them up.
Yeah.
And they had my stuff on file. And then once I crossed over and started an LLC and got my tax ID number, then it was time for a tax advisor.
Yes.
Anyway, go ahead.
The difference is, but the difference is the tax preparer, they should at least know the basics, know where to plug the numbers in, and understand how and why you're being taxed. That's about it. So it's about looking in the past for the most part. The tax preparer obviously has to understand that, and they have to understand the future. So again, like I said, this turns into a team. This turns into strategizing. So again, you as an individual need to have your books together, because if your books aren't together, not only are you going to be charged more, but now it's going to be harder to have accurate numbers. And you need accurate numbers, because business is numbers. I know people want to talk about, marketing and sales, but if you don't know your numbers, you don't know where you're going. Period. And trust and believe, the IRS sure knows when you're off base, because they have a huge database, and they use it to statistics. So they can tell based on your industry, based on your business type, based on if you're an employee, your position, if you're off base. That's how they know. They have a huge database, and they're just going to use statistics. How far off is this guy? He's out the range. He's out the range like 3 or 5%. All right, we're going to check this out. Believe it or not, a lot of people think that, rich people or wealthy people, they're always cheating. Actually, it's really the people in $100,000 to $200,000 range. That's who gets audited the most.
Really?
Yeah. Yep. They get audited the most. They do. Numbers wise, obviously, because it's more of them than obviously rich people, but even percentage wise. Yeah. And then I would say the second would be people who qualify for child tax credit. So
really?
Because a lot of people are trying to cheat. And here's the kicker. What a lot of people are trying to cheat. When one person, especially people who they got, they have children from multiple people, and they're not living together, all this other stuff. Whoever plugs in that child's social security number first, that's it. So say you went to your tax preparer and you had your taxes done for, I know you don't have a son, but your son, and then your ex-wife or what have you, ex-partner, she came to me to get the taxes done, and I put his social security in. She wants to claim him. It's gonna get kicked back. A lot of people don't know that.
No double dipping.
That's right. Now there will be some people, and it always happens, who will try to cheat and lie. And now I'm also talking about tax professionals. They will also do that as well. They will also cheat, but what they will do is that they'll just take people's money and then they'll like disappear. It happens a lot. But see, that's mainly only going to happen with people who only qualify for the child tax credit. In my opinion, for the most part, that just means you don't make enough money. For the most part. That's what that means.
Okay.
Yeah.
Well, Salchi, we're right at 45 minutes. So is there anything else for this, for filing your taxes for 2022? Is there anything else people should know that they're not thinking about?
I would say, I mean, it's not a big deal. The standard deduction went up a little bit. It went up about 3.1%. They do that every year to keep up with inflation. Obviously, we know inflation was far higher than 3%. So, the standard deduction it's up for single and married separate. It's up now to $12,950. As opposed to 2021, it was $12,550. Surviving spouse, married, filing jointly, $25,900 from $25,100. Head of household is $19,400 from $18,800. That's it. And the standard deduction is your gross. It's subtracted from your gross income, and then that's what they use that figure to tally up your income tax. Now, obviously, that changes based off of if you have a traditional retirement, because your traditional retirement will further lower your taxable income today. So this is when things kind of start to get, complicated. If you're just a regular employee. Now, if we're talking about self-employed, now if we're talking about a legit business owner, whole different world. Totally different. It can get extremely complicated. Again, because like I said, depending on the income and the income type, like, okay, let's use Donald Trump, for example. His taxes finally came out, and they found out what is most of his income? Dividends. The dude's making over $10 million in dividends per year. Easy. I mean, well, for him. That's just dividends. Like, people need to wrap that around their head. And they say he doesn't have money. Do you know how much money he needs to have to get $10+ million every single year a clip in dividends? The guy's not broke. Like, but people don't know. They don't get it. They don't understand.
Well, I think folks just wanted to know.
Yeah. And now
Just
they probably upset. Oh man, he really wasn't cheating on his taxes. He wasn't. And when he said, he was, in a sense, he said he was smart. I mean, all he was just, following. Well, his preparers or his accountants were just following the rules. Technically, one accountant viewed his taxes and said that they could have done a far better job. It was pretty funny. It was pretty funny. But most people don't understand taxes. They don't understand what's going on.
So, Salchi, let me ask you this. Well, Alonzo's there in the chat. We talked about life insurance about a week and a half ago. Now, is it life insurance is not taxable? Or is it taxable, or the interest?
Well, it depends on how it depends on the situation.
Okay.
If you received life insurance, obviously because your spouse died, correct, they're not going to tax that. That's not taxable income. So
okay.
Yeah.
And Alonzo, I'm not asking him this to second guess your knowledge set. I'm just asking it from a different perspective.
When it comes to taxes, if the person is half decent, the first initial answer should be it depends.
Nice.
Because what's the situation? What is it? Like and a lot of people get upset, but that is the correct answer. It depends. Okay, explain. You need to give me your details. When did it start? How much did you start with? Exactly when? Where did the money come from? Like it all changes. Every little thing changes. It's really that complicated. The other thing I would say is for taxes, believe it or not, January is a time to actually prepare for your taxes for next year.
Oh,
Yeah.
really?
Yeah. And it's actually, well, yes, it is. I would say for employees, it's kind of simpler because your income is not as erratic. So um, my laptop was, I don't know, it wasn't allowing me to get on. So I mean, I wanted to show you guys, but I mean, I have the stuff printed out. So like, I can tell you like for 2020, I can tell you the tax table. Now the 2023 won't come out until late into next year, but you'll have a good idea that most likely the percentage is going to go up at least 3%. Typically, that's what they use. So for 2022, let's just use 99,000. I'm looking at the bracket. Obviously, everything changes from single, married jointly, married separately, and head of household. But let's just use single. So if you made 99,950 to 100,000 single just from federal tax, you're gonna be your tax bill is $17,830, not including state. So I already know that. I look at this and I already know that right off the bat. So let's say, okay, I want to plan for this year. I'm most likely going to get a raise, most likely, but I would at least use that number and say, yeah, it's probably going to go up at least 3%. Okay, fine. Minimum. Fine. So I'm going to add the 17,830 times, 0.03, roughly that. Obviously, whatever your state, I would do the same deal. And then obviously, once you go into what's taken out of your taxes, and you could do this technically anytime with HR. Or you, depending on how many times you get paid, whether it's 52 times or 26 times, I would just divide that by 26. So then every time I get paid, I just need to make sure bare minimum when it comes to federal, at least federal and state, at least that number is above. That's it. That's all you gotta do. That's all you have to do. So then when the following tax season starts, you don't have to worry about owing money or paying late or having penalties, any of that stuff. Most people, they won't do that. You know how many people I told to do that last year? We'll see if they did that. Maybe one. Maybe one. Any life changes, major life changes, you had a child, big, you get bonuses, anything like that, I would adjust your deduction immediately. It doesn't matter when it happens. I would just adjust it. And people don't understand you can adjust it any time with HR because per tax policy, you're responsible. Even if your employer makes an error, you're still responsible. A lot of people don't understand that. So every time you get paid, that's why I gave that example just now. So then oh, this is off. You need to look. I mean, think about it. It's your time anyway that you'll never get back. So you kind of should take it serious. So that's what I would state. Same thing. You want to make sure Social Security is correct. You pay half. You pay what 7.2 or 3. I forget the exact number, and the company pays the other half. So you want to make sure that's correct. And also, when you move, you want to make sure that Social Security, that department, that they know. Okay, because they monitor that stuff every year. Speaking of Social Security, as of this year, your required minimum deduction from your let's say your pension, what have you, is going up, not for 2022 but for 2023 is going up from 72 when you turn 72 to 73. What's interesting is that they're going to raise it to 75 in the exact year when Social Security will be underfunded. Interesting. 2033. Not surprised.
So 2033, that's the year that Social Security is predicted to be.
Oh, yeah, they already know it. They already know it. Anytime between 2033 to 2035. They already know.
Wow.
They already know. It's going to be underfunded. That's all.
Well,
And
does that mean seniors won't get that money, or they'll still get some money?
That means most likely it will be underfunded. Most likely their what they will receive will most likely be reduced. That's one thing. Here's the other thing a lot of people don't know about Social Security. If you make over, it's like 36,000, they tax your Social Security at 85%. A lot of people don't know that. Your Social Security income, 85%.
So does that mean if you make, which you said 35,000?
36.
36. That means if you get Social Security and you make over that amount, they're taking it off the top before you even get it, right?
Yes.
Okay.
At 85%. So, do you see why I always harp on you need to be a top 10% income earner? All these, I don't want to qualify for anything except for being an accredited investor and above. That's it. I don't want to qualify for child credit. I don't want to qualify for anything. That means I don't make enough money. That means they're giving me a break. That's what that means. That's a nice way of saying they're giving me a break.
Mm-hmm.
And again, I'm not attacking anybody's character. Well, no, we're just talking pure numbers.
Okay. Well, do you have anything else to say on that, Salchi?
I mean, unless anyone has any questions, I guess I would say the last thing is just the difference between deduction and credits, because people don't understand that. Again, this is quick. A deduction reduces your taxable income. A credit, is a dollar for dollar reduction of the money you owe. And that's it. So, we were talking about the child tax credit. So let's say you actually didn't make a lot of money, or you didn't make enough money, or let's say you actually, what's the poverty line, or what's the minimum? So 12,950. Let's say you didn't make that much. Technically, you don't have to file if you made less than that, but you won't get your refund if you don't file. But let's say that was it. Or let's say 12,950. And you actually have 2 or 3 kids, and you can actually just, prove that you actually, pay for 50+% of their for the children to survive. Okay, so you can pretty much max out on a child tax credit and receive all of that money. So technically, you're effectively actually not paying any income tax, like at all. And actually, some 50% of people actually don't pay any income tax at all. A lot of people don't know that, like at all. It's only those of us who are in the top 50% who actually pay income tax. So as of last reporting, that was it's off the top of my head. I think it's somewhere between 42 and 44,000. That's the cutoff. So all of us who make more than that, we actually pay income tax. Everybody else below, they don't pay any income tax.
So, all right. So now we're into the who pays taxes and who doesn't. Yeah. And so everyone, that passage I read, they cover that in that book. So how much do the rich actually pay, and what do the other brackets pay? I was going to try to present that, but you need to show the tables with that. If you don't show the tables.
I can tell you right off the top of my head. The rich pay 30% of the income taxes collected. 30%. And the rest of us in the top 50%, we pay the rest.
So 70.
That's it. Yeah. That's the fact. So when they say the rich don't pay enough, percentage-wise, yeah, they could potentially pay less percentage-wise. But many are paying more in a year than you will make in your lifetime. In your lifetime, gross. They're paying that annually. Some even monthly. Like people, I wouldn't talk if I didn't make a lot of money. Seriously, right. I wouldn't. I wouldn't complain.
Well, you know, when you watch the State of the Union, and the current president, starts going on and on and on about the rich need to pay their fair share, the people who don't know what you know, they rally behind him and say, "Yeah, they're stealing money from the country."
That's called marketing for votes.
It's propaganda too.
Yes, that is exactly what it is, because we will sit there and just say, "Wow, this is again." One of the guys that do taxes, like I told you, he works on Capitol Hill. We laugh at that. He reports directly to Congress, and we laugh at what politicians say because we just look at the facts. Like, I mean, literally laughing the whole time while we're doing taxes. I mean, unless, you know, there are clients there, of course.
Right.
Yeah, it's because people, it's all about emotions. And you know, people's eyes just glaze over when you start talking numbers because you literally have to work. Mm-hmm. It's mental. So the eyes glaze over. Even people who make a lot of money, a lot of them, their eyes glaze over. And it's like, all right, man.
Yeah, emotions and manipulation.
Yeah, that's what sells.
Okay, so the rich pay 33%.
No, about 30%.
30% of the total taxes. And
yes.
Then the middle class pays the rest. Or what's the cutoff? Is it about, was it 30,000? Is it?
What do you mean? You mean household? You mean household? You mean
yeah? So the rich pay the 30%, and then the next level down that pays the 70. What's the cutoff for them?
The cutoff. The cutoff is it's between 44,000 and up. So everybody else above, you know, they're the ones paying the income taxes. Now, okay, so this is hard because people don't understand the difference between rich and wealthy.
Yep.
A lot of times they will sell somebody making 400,000 as rich. That a real rich person would laugh at you. They would say, "You don't know what you're talking about." Oh, actually, they wouldn't say anything, and they probably wouldn't talk to you again because you don't know what you're talking about. Yeah.
Well,
1% on average in the country is roughly, I don't know what it's going to be for last year because the numbers won't come out until the end of this year. Mm-hmm. So last I checked, it was some 500. I think it was 542,000. So that's where the 1%. That's entry into the 1% on average in the country. There's a massive difference between the 0.1, the 0.01, 0.001, massive difference. And the people who, but see, the way they market it is like the people who are in the 0.0001%, they market it like there's a lot of them. I can tell you exactly how much they made. And it's only like, I don't even think it's even like 2,000 of them. It was like 77 million plus in the year as an individual. It's not even 2,000 people. That's it. Like they talk, but the politicians talk like there's a lot of Elon Musks. It's not even 2,000 of them. You see what I'm saying? Because I know the numbers, so I know what they're talking about. You know, the 0.01 starts at about 2-some odd million. You see the difference? That's a massive difference.
Okay, so the 0.01 and then the
0.001 and the 0.00. There's 2 zeros and then there's 3 zeros. The 3 zeros is basically you're making 77 plus million in that. You made 70 plus million in that year, and it's not even 2,000 of them.
And the 1%ers, they start at what?
It was roughly 542,000.
Okay, it's good to know.
Is that not a that's those are we talking, that's different worlds, literally. And that's why a real rich person would say 400, 500,000 is not, it's not rich. That's why they would say that. But you're thinking they're being arrogant. They're being factual. It isn't. And then when it comes to wealth, ask anybody who's really wealthy. They should at least know. And they will call it investable funds. That starts at about 30 million. That means you have quick access to 30 million liquid. It's not a lot of people. It's less than 50,000. In a country of over 330 million. And only as of 2021, you're looking at 157 million to 162 million who actually filed the taxes. That's it. And then remember, only half of those actually pay income tax. You see how the numbers just shrink?
Wait a minute. You said only 152 million?
Only it's roughly 157 to 162 million actually filed their taxes.
You're talking about the total population?
Yes, out of 330 plus million people.
So that's about half. So what about the other people?
They're either retired or they're children.
Okay. Wow.
That's it. Exactly. So it's not a lot. That's what I'm saying. It's not a lot of people. It's not like it's not a whole lot. So then if you want to go down to this whole, oh man, the person needs to be making this much money, it's not a lot of people. Like it's not a lot. Like I wish I had my stuff was connected because I could show you, and it's just not it's not a lot, man. I mean, pretty much once you hit that 200,000 a year mark, that's when the numbers, the demographics start to tank fast after 200,000 a year.
Okay.
Like that's all I'm saying. I don't want to depress people, but
no. So
those are the numbers.
I can stay on all night asking you about this. She'd had a question, and then I'm gonna get us in trouble and take us back to Don Cheeto. She'd asked, "What's the best way to save on taxes when you make between 300 to 500,000?"
It depends. How are you earning that money? The worst way to make money from a tax perspective is an employee. So you're going to pay the most. So I can tell you, okay, so in that range, because I have it right here, in that just from federal, if you live in California, that's 13%. Hell no. State tax, 13%. Insane. So if you make over, as a single person, if you make, it's okay. So if you make over 539,900, you put that number in, you would times it by 0.37 because that's 37% tax, and then you would subtract $37,045. That'll be what you owe. So it depends. So let's just say 550. 550 times. Shoot. 50 times 0.37. 203,500 minus 37. 45. So you'd be paying just federal loan. You'd be paying $166,455. That's how much you would owe the federal government as an employee, single.
And what was your gross salary?
550.
Wow. So they're taking, what's that, 25%?
Yeah.
Okay.
And then again, depending on your state. So that's what I'm saying. It depends. Okay, so let's say you're self-employed, and that opens up a can of worms, because if you really want to lower your tax, you can be the employee of your entity and take a certain percentage. You need to take a certain percentage as income, earned income, a wage, and then you could take the rest as dividends. Remember, dividends is one of the lowest tax. So you talk about 15%. There you go. That's how you can do it. But again, you need to be self-employed.
Okay, so Salchi, I have to ask you this. I said we were going back to Don Cheeto. That's one of his nicknames.
Yeah.
But in our insurance discussion, and Alonzo, again, I don't even know if Alonzo said this, but someone said that was a part of his strategy too, was insurance. He had money in insurance.
Okay.
So it wasn't as taxable as something else. I don't know.
It isn't earned income.
Right.
That's what I'm saying. That's the worst way to make money.
Earned income.
It's just I mean, it just is what it is.
And it's what most of us are taught to do.
Yeah. I mean, well, yeah. I mean, yeah. Well, here's the thing. Everyone is not cut out. Everyone's not cut out to be self-employed or to even run an enterprise, a business enterprise.
Right.
First and foremost. Then you actually have to compete every day. And it's not just you by yourself, because the fact is most registered companies are actually it's actually don't have any employees. It's just a sole proprietor. Actually, that's a fact. Like, you don't even want me to get into those numbers. It really gets scary, because if we're talking that, we're only talking some 30 to 50,000, really. So really, you could be making more money as an employee with benefits.
Right.
Yeah, most companies don't even make more than 10 million a year in revenue. Not even talking about profits. There's a big difference between revenues and profits. So that's what I'm saying. If people just knew 20% of what I knew, and they had any kind of urgency, they would change their life literally within a year. They would change it, because they would say, I don't really have a chance. Like, or they would just have a meltdown. Like, seriously. Because their worldview would shatter for the most part, because everything they've been taught is wrong. Okay, not everything. 90 some odd percent is unfortunately not what they think it is. Sorry. You need to understand. You need to be able to read financial statements. I'm sorry, if you can't read financial statements, how do you know an investment is good? Whether it's real estate, whether you're investing in a small business, whether you're investing long-term in stock. Oh, especially if you go with stock. You can't read a 10K? Forget about it. Like, people don't even realize how all these tech companies, how they really used, how they're even using their accounting. It's basically inflated. If you understand that, then you will know a lot of their all that stuff is inflated. Oh, no wonder now they're starting to fire people. Oh. But see, we already knew that was going to happen. We were just waiting. We're like, this is really unsustainable. When is this going to happen? Obviously, you don't want bad things to happen to people, but you just know it's unsustainable. So those who are really, really deep into investments, we already knew that. And we're talking about it big time last year, especially with Tesla. They're using funny accounting. Virtually all of the tech companies. Most people don't know that. And when you know these type of things, and you know the people who are unsophisticated get into the game, guess what you do? You wait. And when it starts to crash, you're short. If you know how to short. So you're literally making money as the stock's going down. Or if you're really good, you're making money as the stock's going up, and you're making money as the stock's going down. I mean, it's like people have, like, people don't. It's just, people just don't know. And then because you are an accredited investor, which means as an individual, the last 2 years per SEC regulation, last 2 years you're making 200 plus thousand, and you're expecting to make 200 plus thousand this year. So you can't invest in these private placement deals, whether it's oil and gas, whether it's these big real estate deals. That's where the game is. And Alonzo is correct. So the stock market is, you need to be ice cold emotionally, really. You need to know your numbers, and you need to be quick, and you need to have a system. People like you need to be so disciplined, and most people aren't. Even the professionals, less than 10% of them actually make money out of the professionals. So you with no training, think you're gonna go get your what do they use? I don't even have it. What's the platform most of these people, especially in 2020, the people were using to trade, whatever that platform was, they're getting slaughtered. And a lot of them were using their tax credits that they got from the government. They lost it. Of course you're gonna lose the professionals. You think you're gonna get in the court and beat LeBron? Yeah, you might get a couple shots in. Are you really gonna win? No. So this is what's going on. I mean, obviously you see my Instagram, and that's like, my Instagram's like rated G.
Yeah,
it's really rated G when I put up the finance stuff.
Yeah. Going back to Alonzo's quote here, I like Robert Kiyosaki's quote where he says, "The bear goes up the stairs. No, the bull goes up the stairs and the bear goes out the window."
Yeah.
I laugh every time I conceptualize that, and I see it in my mind. That the bull goes up the stairs and the bear goes out the window.
Yeah.
So Salchi, we're at an hour and 17 minutes. Let's wrap up soon.
Yeah.
Going back to Don Cheeto. So historically, looking back,
okay,
that tax plan, from your vantage point, what are your thoughts on that tax plan? Some people liked it. Some people said they got clobbered under it.
Which tax plan?
Trump tax plan.
Those who had real estate investments and actually ran it as a business, they did well. But again, there's levels to everything, and most people, they're not at that. They're not professionals, even in real. Believe it or not, most people in any endeavor, they aren't what I would consider a professional. So I'd be nice to say, let's say 20% of them are. They aren't, because my day job, we talked about it, and even the clients that we have, because I'm in the dealing with the business side, and if I'm being nice, maybe 5% of them are professional. Like that's it. So under Trump, yeah, I mean, he opened things up. I will admit he did open things up for small business. I mean, he in that sense, he did do a good job. I mean, a lot of people don't like the guy, but he opened things up. He did lower taxes for small business. I mean, he did. Like, factually speaking, he did. I can look at, I have my tax. I can look at and tell you how much total tax was collected. Under Trump, it went down. And I'm not being like political. When you look at it, before Trump, 8 years before Trump, and now, Trump's actually went down. So Trump actually wasn't lying. I mean, a lot of people won't like that, but I'm just a numbers guy. He wasn't lying.
Okay.
But again, you're not a real investor. Not you particular, but I'm just saying the typical person, they are not a legit investor, regardless of whatever industry it is. So they can't partake.
No. Well, some people were mocking other people. Now, it's only $50 more per paycheck. you're only getting $50 back per paycheck. That's nothing. Why are you celebrating getting $50 back?
It's your time. Well, technically, with the exception of a tax credit, technically, for the most part, it's your money that you're getting back without interest.
Yeah.
And that's why I said this is the time. January is the time to do your tax planning. That's why I
Well,
said that.
the other thing is that $50, if you take a long view of it and you project over 4 years or even just a year, that adds up. That's something you can do something with that.
Yeah.
But if you just have the short view of, oh, you got $50 back per paycheck, who cares? It's a difference in mentality.
Yeah, and I wouldn't even argue with him. Okay, because again, it's very emotional. I'm just with the numbers guy. $50. Okay, where can I put this? I'm always, where can I put this? Like, I always want to be like almost broke. Like, that's my mentality. As long as all my bills and I can do all my stuff, like, I don't worry about bills and expenses. Like, that's how I think. I don't want to have a lot of money, and this is one thing that Robert Kiyosaki says. He doesn't want a lot of rich. They don't have a lot of cash. They need the money working for them. Yeah.
Mm-hmm.
That's how my philosophy is, if I'm going to go into an investment or learn another skill, bare minimum I need to make an extra $50,000. Like $50,000, or it's not worth my time. Like, it's not worth my time. Like, I just write it off. I don't even think hard. Why would I do it? Because that extra money, I'm not looking at that money to spend it. Most people are looking at it to spend. I'm looking at it to invest. So that's why I want my income to be high, so I don't have to worry about my expenses and vacation, what have you, anything like that. So I can dump all my money into investments. Like, that's my mentality all the time. And that's why I say people need to be top 10% income earner. Like, you need to be. Like, you just have to be. It's just numbers. Like, you don't have a lot of time. But if you can make a lot of money now, you can compress time. If you don't make a lot of money, you need more time. That's the risk. Like, people need to think about that. And that's why I told you before, money to me, it's more time. Like, I really look at money as time. And once you start thinking like that, then it's like, okay, I get it. Okay, so what are they doing? Okay, so this went up for this reason. And you don't really get mad. Okay, the utility company, it went up because of inflation. They're not trying to rip me off. They're literally just keeping pace with inflation. Like, that's all they're doing. Nothing else. So I need to make more money. That's it. I need to make more money. That means I need to increase my skill or learn a new skill. That's it. Like, that's always my mentality. Always.
Okay. Salchi, Alonzo says, I think he wants to follow. He wants you two to follow each other on IG. Okay. So what you want to say? What your IG is? Your IG handle?
Oh, it's my name. It's my real name. Salchi Hansford. SalchiHansford. I'll pop up. I'm the only one.
Okay. Alonzo, I hope you got that. I mean, I follow Salchi as well on IG, and you follow me, so I'll definitely clip this and clip parts of this and try to promote all over the place. So, Salchi, do you have anything else?
Again, unless anyone has any questions, again, you're responsible for your taxes, man. I mean, remember your time. You can never get your time back, and just when you like really embody the fact that you never get time back, then you would take it more seriously. You would have more urgency. You will be, in my opinion, you will be more efficient. Then, depending on whatever else you're learning and the income, what have you, then you can have more time for quality leisure. So when you are relaxing, what have you, not thinking about freaking bills or my retirement,
Mm-hmm.
because you're sticking to your plan and you're just adjusting based on policy.
Salchi, I think we have a request here. Would you like to come back and it's been three of us? You want to be the fourth horseman?
Yeah. Yeah, just let me know.
All right.
Yep.
There it is. We'll have the equalizer, the
Yeah.
all-star advisor, Sheed We Here, and the doc.
Yep.
So, all right. Look out for it.
Yep.
All right. So you are responsible for your taxes.
You are wholly responsible. You need to understand, you need to understand that, period. Whether I do your tax or whether you do your tax. Period. Like that's it. And also, I mean, it's right there in the policy. Everything is taxable unless considered otherwise. I'm quoting the IRS, and it's well over 50,000 pages. And not even, I don't even think 10 pages is even about actually raising taxes. Majority of that stuff is for, again, business owners and investors. So again, this is why I say you need to be a top 10% income earner minimum. Second level, you need to be accredited investor. But that takes education and income. And then that's when things get a little, and then that's when you can start using different things like, Alonzo, you can start using insurance as collateral. I mean, it's just, that's what I'm saying. That's when things open up. But if you're not in that level, there's not much to really talk about. Again, what we talked about is as good as it's gonna get. You get matching, hopefully. Get your HSA. Most people don't even know about it. You should be maxing out on your HSA. Which was $3,600. Should be maxing out because that can be used for health expenses, or later on, if you have any health problems, that's capital. You don't need to wait for your insurance company at that point. And they don't tax you on that. I max mine out and I don't get sick. I don't care. I'm going to max it out. Period. And I have insurance. Health insurance. And I'm trying not to be overly reliant on any of the establishment. Because I see what happens. Seeing what happens to family members who have gotten cancer.
Okay.
Excuse me.
Aisa A for the $2 super chat. Much appreciated. I'm going to go back to time before we wrap up. You talked about not getting time back. I would say, or I would add that to learn this stuff, you have to kind of turn your head from all of the other societal distractions and develop an interest in it. When I picked up the Rich Dad Poor Dad book, it was sitting right there in Barnes and Noble. I walked in and I saw it and I picked it up and I said, "Oh, this looks interesting." Yeah. But you have to have an interest and a curiosity about it.
Yeah. Excuse me. And it's a discipline. But then you also learn how the world really works. So for me, it's so much easier to just tune out the noise. Like, it takes mere seconds or a few words for me to know something's nonsense or propaganda immediately. Because once you know the facts or where to look, that's nonsense. So you're saving time. Or not to go into certain, investments. Wait a minute. People who are accredited investors don't do that. It's probably not a good deal. Doesn't necessarily mean it's a scam. Just means it's not a good deal. Period. Because what people don't know, well, one, the attorneys pretty much touch everything. So what people don't know is that your attorney bill can easily be $5,000 to $50,000. Easy. So just for the attorney, let's just say your attorney bill is $50,000. That alone might make the deal a bad deal. Just for them to write up contracts, paperwork. That's it. And then if you have various investors, anywhere from 100 to 200 investors just alone, for your tax professionals to do the K1s total, easily could be $8,000. Oh, they don't tell you about that. That's why they have crowdfunding. I would never invest in crowdfunding. It's most likely a bad deal. Like I just said, if I know the tax profession, if I know just to do the taxes alone, I'm shooting low. For all these people in there, it's going to be at least, I'll be nice and say $2,000 to $5,000. Attorney, if they're actually doing it right, attorney fee is going to be at least $10,000. So we're already talking $12,000 to $15,000 alone, just that alone. Who are the partners? Who's managing this stuff? Wait, do I even understand this industry or this investment type? I would I won't even look at it. I wouldn't. Real estate, same deal. I'm telling you. There's a deal that's going on in DC, and just the firm I work at, just our fee was over $300,000. Like people don't know these things. So even when you hear all these influencers talk, oh, real estate investing, you need to get scalable, which is true. They aren't telling you what you need to pay the professionals. Like I said, I don't want to get into it's in DC. It's 200 and some odd units. Our commitment fee alone was over $300,000. Appraisal was $8,000. And you need to have a certain percentage in reserve. Like you need to be a professional. You will get slaughtered if you aren't. One deal can wipe you out for the rest of your life, or ruin your name if you don't know what you're doing. People have no idea what's going on around them.
No.
No clue.
All right. Well, I better wrap this up.
Yeah.
I gotta go in the office tomorrow. So, Salchi, thank you, everyone. If you're on IG, I would recommend following Salchi. He shares some fire stuff. Also, if you're not subscribed, check out Alonzo, the All-Star Advisor. He's been over recently with Sheed, so I think we're gonna do more money talks, and it sounds like all four of us are gonna huddle up at some point.
Yeah.
So I'm gonna have my notepad here. I'll be taking notes as you guys talk.
Be a good tennis match.
Okay.
Team tennis match.
Well, Salchi, I'm going to give my closing spiel. You can hang on, or you can bounce off. It's up to you.
Yeah,
so,
I'll listen.
Okay, everyone. I'm a writer. I'm curious about all this stuff, which is how I know all these people. I'm a writer. I told you about my book in the beginning. Here's my newsletter. There's a 2-paragraph greeting there. You just scroll down, hit that subscribe button. That takes you there, and you just enter in your email address in that field, and you're a part of the club. I could always use more names and more subs there. The link is below in the description box with some of my own writings, like the matching contribution writing that I shared, but the link is also here in the chat. We might have a nickname now. This might be Growing Legs. All-Star Alonzo wrote the 4 Horsemen. That might be copyrighted, but it's in the Bible too. So yeah, the newsletter's there. Everyone, please like, share, and subscribe. If you're watching on the playback, and you want to donate something to the channel, that information is below in the description box. You can also leave a super thanks. Those count as well. And with that, I'm gonna wrap this up. As always, remember that your attitude determines your altitude. Always try to do your best. And I will talk to you the next time. Black History Month is almost here, so I'm going to be sure to do some of that. So look out for that. So you all have a good night, and I will talk to you again soon. Bye bye.